APLD is back in the headlines, but the market might be misreading the script. You may have heard that Oracle and OpenAI are scrapping their massive expansion plans for the Abilene, Texas data center. On the surface, it looks like a setback. But if you dig into the trader sentiment across boards, the reaction isn't fear, it is anticipation. The big question everyone is asking: if Oracle is out, who is stepping in? Speculation is reaching a fever pitch that meta platforms could be the new anchor tenant, and that pivot changes the valuation math entirely. While the Abilene news caused some short-term volatility, yes, with a loss of 10% yesterday the 6th of March, the long-term bulls aren't flinching. Why? Because the core business model remains underpinned by an insatiable, accelerating demand for AI infrastructure. We aren't just talking about data centers anymore. We're talking about large-scale AI powerhouses. Hyperscalers are in a literal arms race for capacity. APLD's recent price pullbacks are being viewed by many institutional and retail investors as a warning sign, but as they're not viewed as a warning sign, but as strategic entry points to add to long-term positions. They are betting that the Abilene vacancy won't stay vacant for long in this environment. The market is currently in a wait and see mode, and that usually precedes a massive move. Traders are keenly watching the wire for new hyperscaler lease agreements. There is a growing expectation of a significant press release in the coming weeks. If that Meta rumor or any other tier 1 hyperscaler deal is confirmed, we could see a rapid re-rating of the stock. Right now, the smart money is positioned for that announcement to drive the next major leg of price action. Technical outlook and finding a flaw. Let's look at all the levels. As the stock experiences this volatility, we are seeing active discussions about where the true price floor is, where the true price floor sits. So this is its daily chart. We are identifying key support levels that we have held up that have held up during AI sector corrections. For those looking to manage risk, these levels are critical for identifying an optimal entry point. Are we at the bottom of the deep, or is there more flush before the next rally? We'll be tracking the order flow and volume spikes to see where buyers are stepping in most aggressively. As things stand right now, lower prices are still expected, going all the way towards the middle of April. There might be dead cat bounces, and they may still be reasonable. As a matter of fact, for traders, they may still be reasonable. We have one is expected on the 11th, Wednesday 11th. Another one, a stronger one, is expected on the 16th of March. Then another one is expected in the by early from the 30th of March to going all the way towards the 1st of April. So in the midst of lower prices expected, there might be dead cat bounce opportunities, but of course, mostly for traders. But nothing stops you from taking advantage of that. But this is not a recommendation that you should get involved or buy any dip. So right now, APLD is a high beta play on the AI infrastructure revolution. Whether it's Meta or another giant talking about Abilene, the underlying trend is clear: more power, more cooling, more capacity. Yeah. So you can see here the stock is a high beta stock, and we are broadly in the regime generally now. The broader market is, I would say that the AI drive is behind, but the AI theme is a very strong theme in the broader market today. And you can see here APLD has a beta of 7.3, reflecting. I mean, it tells you how relevant the stock is within it. It of course its relevance within the AI theme is very high, and then AI theme is also is also significant in the broader market today. So this aligns with what's how I mean its role in the broader market. Yeah, so it amplifies the broader market by a factor of 7.3. So if the broader market is down 2%, APOD is likely going to be down around 14% or thereabout. I think yesterday the broader market closed, lost S&P lost around 1% or thereabout. So yeah, it's yeah, but yeah, lost around 1%, and given the news that happened, amplified it further. Yeah, yeah. So that's what's going on right now. Like I pointed out, lower prices expected. In terms of projections, we have. Let's see what the projections are saying. 19.73, 16.28, 25.33. Yeah, it's currently at around that 25.33. This is its daily chart. Let's see what we have on its weekly chart. Okay, let's see whether we have an alignment on the weekly chart. Well, I think I covered the stock a couple of days ago. Yeah, but things might have changed. On the weekly chart, yes, we have an alignment. Lower prices expected up till yes, middle of April. Yes, we have an alignment here between the what we have on this daily chart, on this weekly chart, and what we have on the daily chart. So it's currently resting on a previous pivotal projection of 25.36. Yes, is it going to bounce? It's actually saying that it might just consolidate and then resume the downtrend. Okay. On the 4 hour chart, let's see what we have. On the 4 hour chart, we have extrapolation saying that a bounce might kick in and might hold up all the way towards the 17th of March. It's starting alignment with what we have in the daily chart up to 17th of March. What do we have here? 16th of March. Yes, yes, we have an alignment. At least this is indicating some alignment. Yes, by the 17th on the 16th of March, we have the stock is expected to have bounced, yes, from current levels. Yeah. Okay. We seem to have some alignments, between the 4 hour chart and the daily chart, and then the daily chart and the weekly chart. So let's see how all of this will go. Okay. So currently the stock is consolidating within a longer term bullish trend, or that's called by its 200-day moving average. So the 200-day moving average is still strongly bullish, still trending, I believe. But in the short term, in the medium term, it is correcting within a medium term bearish trend. Okay, so thank you very much for watching this video.